All right, so less than an hour ago at the White House, at a press conference with President Trump, Larry Kudlow just said what you see there on your screen, $6 trillion in stimulus. So this is a combination of stimulus from fiscally from Congress and then also from the Federal Reserve. Now, initially, the numbers were supposed to be higher from Congress, but I think they were worried that if they promised even more immediately with a headline number, that things were going to get ugly. Kyle Bass said about over a week ago, I think it might have been even 10 days or 2 weeks ago, he put the number right at $6 trillion. So if you're not familiar with Kyle Bass, he has a lot of contacts inside the White House in the Trump administration. He has contacts in both political parties. He meets with both, but the sources he was talking to in the Trump administration were dead on. So he nailed the crap out of that. That was a really great call by him. He nailed that perfectly. So, $6 trillion in stimulus coming. Already starting. Danielle DiMartino Booth just did an interview today saying that the Federal Reserve with open-ended QE will be buying $625 billion per week now in a combination of U.S. Treasuries for full yield curve control and then also corporate bonds and corporate bond ETFs. We are in uncharted territory. Another day, another bailout, basically. Or another day, another stimulus, depending upon how you want to label it. The gold price has been going absolutely bonkers with volatility. So about 24 hours ago, I want to say the gold price was as low as 1,480, right around there. And the gold price now, it got as high as 1,689 today. So basically a $200 swing in barely 24 hours. $200 swing in the gold price in barely 24 hours. Silver has also ended up substantially higher. The gold market was smashed down when the U.S. markets closed a couple hours ago. It was smashed down from the 1689 number. It was smashed down to, I think, 1630. But the gold market is now rallying again. It's at 1,649, right around there right now, because it is starting to price in the comments from Larry Kudlow. And the reaction to what Kudlow said on financial Twitter from financial professionals is shock and awe. So we are going, what does this mean? This means people want actionable stuff. What this means is we're going to see $2,000 an ounce gold a lot faster than most people thought. We're probably going to see silver rally, although silver's industrial component is not going to help. But silver's investment demand clearly is making up for it. There's problems now on the COMEX. I'm hearing from the CEO of Gold Money, Roy Sabag. He posted an interesting comment on his Twitter earlier today, and there's rumors that the COMEX is telling people that they have to get bars from the LBMA to deliver. So got gold, got silver, and got gold or silver stocks. Be careful which ones you have. I know many of you own way too many junior miners. That you saw the CEO of the junior miner that probably paid someone for an interview to do an interview and help pump that stock. And you went and bought thousands and thousands of shares. You didn't look at how much cash the junior miner had. You didn't look at the balance sheet. You didn't look at how far away the junior miner is from building a mine. Unfortunately, I get these emails and messages all the time where a lot of people, they bought way too many shares of a junior that they saw advertised from a paid newsletter or a YouTube video that has no good fundamentals and is totally reliant on trying to raise a lot of capital, and they can't raise capital. Sad story. The industry, the gold mining industry, and juniors, particularly out of Vancouver, prey on this stuff. I can't name any names. My buddy Peter Spina at GoldSeek will. He doesn't care. I think he doesn't live in the United States, that's why. Okay, a couple super chats here. Just wanted to get that update there. So the timeline for $2,000 an ounce gold is going to be accelerated. I was thinking initially a few months ago that gold would go over $2,000 an ounce in at most 3 years. The timeline is quickly moving up. It's almost definitely, probably within 12 months now, might even be less than that. And you know what? If this 6 trillion headline number doesn't work, don't be surprised if the Trump administration, the Treasury, Congress, the Federal Reserve keeps changing the rules, the accounting rules eventually get changed, or they put another headline number in place, because they're starting with 6 trillion. Remember, only in the last couple days, Congress was to do another 4 trillion. So if you added the 4 trillion, what Congress was the numbers were getting up to, with the 4 trillion the Fed did, that would be 8 trillion. So they were worried that that was too much. But they will be willing to throw another trillion in, 2 trillion here, there, maybe even more than that, if they think the stock market is not going to be able to rally. And here we are, look, magically, look at the stock market. You're going to see all these talking heads on CNBC, on Bloomberg, all these mainstream financial professionals in expensive suits and dresses who want to wait in the waiting room for hours to go on TV for 5 minutes or less, tell people that fundamentals are going to return again, and that's why the stock market's going to go up. That's why the S&P 500 is up 9.38% now. That's why the Dow is up 11.37%. That's why the NASDAQ is up 8.12%, and the Russell 2000, which is small caps, is up 9.39%. They're going to tell you it's fundamentally driven. They will not tell you that this is short. Number one, it's short covering, and number two, the market is starting to price in devalued dollars, more fiat currency chasing the same fewer amounts of stocks. If you count all the buybacks that's been share buybacks that have been done for decades. Okay, got a couple super chats here before I wrap things up. Abbey Road, thank you for the super chat. Dimitri, thank you for the super chat. Asks, is there any point in buying base metal miners given silver price going up? VIX, is there any upside potential for the next 2 to 3 weeks? I would not touch the base metal miners. I did not look at the copper price in the last day or two, but it was at $2.15 a pound for copper the last time I looked at it. If the silver price goes crazy, Dimitri, you will see the copper miners sell silver streams, which would maybe benefit Franco-Nevada or Wheaton Precious Metals. Or they could hedge the silver, which would then put them even more in bed with the bullion banks. So the copper miners have very serious balance sheet problems. I was just talking in emails with Nolan Watson about the copper price. And, the copper miners, he told me he thinks a lot of these copper miners are unhedged. In his opinion, he thinks a lot of these copper miners were unhedged and they just got clobbered in the last month or so. So if the copper miners are unhedged, they are going to have to sell gold and silver byproduct streams that they were not planning on doing. So some of the copper miners were planning on selling gold or silver byproduct streams in the near future, but that timeline may have moved up. But now some copper miners that had no plans whatsoever of selling those gold or silver byproduct streams, that's going to have to, they're probably going to have to sell some. Because it's not a good idea to raise equity right now for the copper miners. It's not a good scenario with them down so much. Oh, FCX rallied 30% today. Freeport-McMoRan, yeah, probably short covering. Freeport-McMoRan does have a lot of gold production, but it's on their accounting, it's a byproduct. I think it's a gold byproduct. So I wouldn't trade the copper miners. If you want to be aggressive, Freeport-McMoRan has a lot of gold. They are actually one of the world's 3 or 4 largest gold mining producers, but the way their accounting works is the gold is a byproduct tax credit, if I remember correctly. So they don't account for the gold in their accounting as a gold miner would. It's a byproduct. So it's written, their accounting's different with their gold production. I don't know if they hedge or not. I'm not sure. I don't know if they hedge their gold production. It sounds like they don't hedge their copper. Okay, I have one more super chat here from JB. What do I think about the super contango situation that's arising? He reached out to his midstream partnership for comment and current storage capacity in Cricket so far. Keep up the great live streams. JB, that would be a better question for Eric Townsend. And actually, I just reached out to him, and that's something I could ask him in an interview. So I just reached out to him last couple days about doing another interview about the oil market. So we'll see if I can get him back on. So you're talking about buying oil and storing it then. It's not my expertise. You asked about that a couple days ago or something. There is an opportunity there. Tracy Schuchart has talked about it. The average person can't do it, though. So the bottom line, timeline has moved up for gold to $2,000 an ounce. There's going to be unbelievable volatility. Unbelievable volatility. We just had our first over $100 or more price swing day. I cannot remember, even in 2008 and 9, 2010, 2011, I cannot remember days where there was a $100 swing up and down in price. And in the last 24 hours, it was actually way over a $100 swing. It was actually a $200, maybe $201, $202, something like that, swing up and down in the gold price. We got as low as $1,480 in gold, right around there. And the high for the gold price, before it got smashed down at the close a couple hours ago, was $1,689. So that is enormous swings. So if you check your gold or silver counts or your mining shares at a different time of day, there could be big moves going on. So calm your emotions down. The volatility is going to be breathtaking now. There's going to be a lot of moves up and down. The paper price manipulation, there will be attempts to slow down gold moving enormously higher, for sure. There will be profit taking along the way. The people who are margin call selling just got, they're going to panic probably and buy. Well, actually, we'll see what happens with their stocks. If their stocks are rallying, maybe they're going to buy more gold or gold stocks. Looks like, though, the margin call selling was overwhelmed on a reversal with the news that's out now. So $6 trillion minimum. And you know what happens with the government? It almost never ends up at the number. The number, because you're going to have Republicans and Democrats, these two gangs, and they're just going to stick more stuff in there because they got their brother, sister's cousin who wants an extra $5 million for this business that he has no experience running. And then, everyone's making trades back and forth, horse trades back and forth for votes. So what'll probably end up happening is, the headline is $6 trillion now total from the Fed and Congress. Now we're going to end up like a lot more than that at some point, if there's ever an audit. Someone asked here about JNUG. JNUG is these leveraged ETFs, and I'll say this again, are almost only for day traders. If you buy and hold these things, you could lose a lot of money very, very quickly. Okay, I hear it all the time. I issue warnings all the time. I just saw someone, I'm going to call him out because he stopped listening to my podcast, and he routinely makes dumb comments and posts in the Wall Street for Main Street Facebook group because he doesn't listen to my podcast anymore, and he bought a bunch of these leveraged gold stock ETFs, and they're lagging bad, and some of them he's lost a lot of money on. He's warned. He probably doesn't check his accounts that often, or he doesn't know what he's doing. He doesn't even look at what's in these things he's buying. All ETFs are not the same. If you buy GOAU, GOAU, which is a basket of royalty and streaming company stock ETFs, you're not using any leverage. You're getting exposure to Franco-Nevada and Sandstorm Gold and some of the other quality gold companies in there. It's not set up to mimic a gold futures contract. So all of these ETFs are not the same. The guy's response to me after calling me names and cussing me out was he assumed that all of these exchange traded funds are the same. I've been warning people for, I forgot how long I've been warning people for. If you are not a day trader, not a professional trader, stay away from these leveraged ETFs. Because most of these things are meant to mimic futures contracts and be closed out at the end of the day, not buy and hold. I know someone that years ago, when gold was rallying a lot in 2016, he made $10,000 on JNUG in a couple weeks, and then he didn't check his account, he was overconfident, and he ended up losing all the money a couple weeks after that. The guy was older, smarter, in the gold community, overconfident, thought he knew what he was doing, didn't take any money off the table, didn't hedge. Whoops. I don't mess with those leveraged ETFs. If you're a day trader, fine. If you're a buy and hold person and you're not going to close your account, close out your positions each day, why are you buying leveraged ETFs? And why are so many people watching a YouTube video from someone where maybe the CEO paid to do the interview and it's not disclosed often? And then you're buying shares of that junior stock, and you're not looking at how much cash the junior has, if they can actually raise capital, and how far away they are from building a mine. It's very frustrating. I hear stories like this basically every day now. Okay, well, that's the end of the rant for tonight. There is a lot of content behind the paywall on my Patreon, starting at only $5 a month. So, bad cup of coffee. Probably the best $5 a month you will ever spend. There is a lot of research now that I put out in the last week about, there's a couple in-depth articles on a couple gold stocks. One of them, which one of my patrons told me to look more at, and I spent 10 minutes on the website, and I found some pretty serious red flags on one of them. And the other one is a very undervalued royalty and streaming company that, while not quite as good as Sandstorm Gold, is still very undervalued. The cash flows were heavily discounted. So if you want to read more about that, only $5 a month. I don't think they actually charge you until either the end of the month or the first week of April. So you would have like at least 5 or 6 days for a free preview then, if you want to sign up, to take a look at the content behind the paywall. You don't like it, you can cancel. It's no big deal. Okay, everyone, thanks for listening.